It's a pretty lovely good evening from here in Delhi, and hope as always that you are keeping fine and absolutely in fine spirits. So on such count, we come directly to the business end and to start this particular chapter which is flashing on your screens, accounting for joint venture. What exactly joint ventures are and how the accounting pattern is going to unfold in this particular chapter, how we are going to do the accounting for the joint venture. These are the questions which we would like to trace out during our what we call entire discussion during the length and breadth of this particular chapter. So let's come straightway to the point. And if you are ready, then we on our side are also ready. What exactly joint ventures are? So we will try to explain this particular point in the initial stages. We will see later on that joint ventures basically is a sort of short partnership and to achieve a particular specific business task. Just to explain the point, let us say A and B enter into a short sort of collaboration, let us say partnership, and they have undertaken a business plan, and the business plan or project is that they are going to construct a corporate building, correct? A corporate building, and let us say they are going to construct this corporate building for company XYZ Limited. Is it clear to you or not? So we may say that A and B has entered into a sort of contract with company X, Y, and Z. And company X, Y, and Z wants a corporate building to be constructed by A and B have undertaken this particular contract from X, Y, and Z, and the contract is that A and B are going to construct a building. So what A and B are going to do, initially they are going to actually pull money out of their pocket, and they will have to incur the various expenses, let us say related to construction of corporate building. That means they will have to purchase the material, they will have to incur the expenses in the form of labor, supervisor's fee, architect's fee. So whatsoever expenses which are required to construct a building, correct? So let us say A and B, in order to construct the building, have incurred expenses worth rupees 8 lakhs. So initially A and B will have to incur the expenses out of their pocket to construct the corporate building or to what we call achieve the business task. So in this case, business task is that they are supposed to construct the corporate building, as I said. So A and B has spent 8 lakh rupees. And once the corporate building is constructed or completed, then A and B are going to ask company XYZ Limited to release the what we call contract amount. And let us say the contract amount was that A and B will construct the building for XYZ Limited, and once the building will get completed, X, Y, and Z Limited will give them, let us say, 15 lakh rupees. Is it clear to you? So now the building is completed. So A and B will receive 15 lakh. This is known as contract price. So A and B will receive what we call 15 lakh rupees. So whatever amount they are going to receive, they are going to write it towards the credit side. And this is a sort of joint venture account. We will talk about it at great length later on. But at this moment, these are the initial stages. So I just want to give you an overview what exactly joint venture is. So you can see in this case, A and B have entered into a sort of partnership, and the partnership was that they are going to construct a corporate building for company X. So A and B will have to churn out what we call money in the initial stages to complete the building. That means they will have to meet the expenses, and once the building will get completed, they are going to receive the contract price from the what we call contracting company, which in this case happens to be company X, Y, and Z. The moment they are going to receive the what we call contract amount, that is 15 lakh, so you can see actually that they are able to earn a profit of 7 lakh. And then they are going to share this profit according to their agreed ratio, let us say 1:1 or 3:1, whatever it might be. So the moment building will get completed and the amount received, then this particular partnership will come to an end. So you have noticed that basically joint ventures, first of all, why it is called ventures? It is called ventures because venture something means to undertake some risky project. Because here the profits may be quick, but at the same time they may have to incur losses. Let us say they took nearly 5 months to complete the corporate building. So within 5 months, they are able to quick money of rupees 7 lakh. The moment they are going to receive the what we call money and the contract will get completed, this partnership will come to an end. So these are the features of joint venture which I have written here. Just pay attention. Meaning and features. It is a temporary partnership, as I just told you a moment. Correct? And the partnership is for a specific purpose. Here the specific purpose, particular purpose was to construct the building. And such association is generally without the firm's name. So in this case, we do not require any name of the firm. We can simply enter into a partnership and start what we call taking the contract work. And the main purpose is to make the quick profits through the joint bearing of the risk. So we are going to actually make the quick money. But as I told you, it is called venture because there is risk also involved. We may incur some losses. So what is the difference between joint venture and partnership? What is the difference between joint venture and partnership? Because generally parties involved in joint venture are called joint venture or co-venturers. So in this case, A and B will be known as co-venturers or joint venturers, correct? While in a partnership firm comprises of partners. In a partnership firm, the partners are known as partners, as you know. And duration. Parties generally create joint venture for achieving specific objectives only. And the moment the objective will be achieved, the venture will come to an end. The venture comes to an end after the achievement of these objectives unless the parties agree to continue work together. But we have seen that partnership on the other hand do not have any such fixed duration. The firm may continue until the partners agree to dissolve it, correct? Or until the happening of certain events. Entity's name. In case of firm, definitely there is name of the entity, but in case of joint venture, there is no need for any firm, any name, sorry. Profit or loss ascertainment. We have seen since joint venture have a specific purpose, parties can ascertain their profits or losses upon the fulfillment of these objectives. That means once the task will get completed, they can easily find out their profit or loss. If they continue to work together thereafter, they will have to ascertain their profits annually. However, if joint ventures want to continue the work afterwards, then every year they will have to find out their profit. But partnership, in partnership, we know that profits are computed annually. Every year firm will have to prepare their financial books of account. Generally in case of joint venture, because it's a very small partnership for a shorter period actually. So generally proper books of accounts are not needed, while in case of partnership firm, mandatory maintenance of books is required. And closure of the business, as I told you, joint venture generally comes to an end once the purpose is achieved. Correct? However, in case of partnership, the firm cannot be dissolved unless the partners actually agree upon it. So these are some differences which you need to know. Now, coming over to the next topic. So after acquainting ourselves with little bit of what we mean by joint venture, and after acquainting ourselves with the features and the differences between the partnership and the joint venture, the next point is that we will talk about the methods of accounting in this particular chapter. What are the methods of accounting? Just to elaborate the point, let me actually create a space for me. Now we come over to the methods of accounting. As far as methods of accounting are concerned, methods. In joint ventures, we will say that there are three types of methods for accounting. Methods of accounting. We will see there are three types of methods, and one by one we will analyze the same. It goes without saying. So as far as methods are concerned, three types of methods are there, as I just told you. One is when separate set of books are maintained. The first method, and it is the most important one, when separate set of books are maintained. When separate set of books are maintained. When separate set of books are maintained. This method is also known as joint banking method. It is also known as joint banking method. Joint banking method. It is also known as joint banking method. Then apart from this, there is second method. And in case of second method, when each party maintains record. When each party means each co-venturer. When each party maintains record. This is second method. Correct? And besides that, there is third method also. What is the third method? Just wait. There is third method also. And the third method is known as memorandum joint venture method. It is known as memorandum joint venture method. And we will see that under memorandum joint method, each party means each co-venturer. Each party, in this method, each party shall maintain records. In bracket you write only transaction of party. Suppose there are two parties, A and B. So A will maintain account in its book, but it will record only those transactions which are incurred by A. That is the difference between second and third method. In case of this method, suppose there are two parties, A and B. Then A will maintain not only the records of the transaction entered by A, but even by the B. That means full-fledged accounting will be done by A. It will record all the transaction incurred by A and B both. Similarly, B will also record the transaction incurred by A and B both. But in this method, the party, suppose party A and B is there, then party A will record only such transactions which are incurred by A, and similarly B will record transaction incurred by B only. So that is the difference. So we shall talk about all this method at length. Now, first we pick up when separate set of books are maintained. So when separate set of books are maintained, how we are going to do the accounting? So first we are going to analyze this particular method. When separate set of books, when separate set of books are maintained, when separate set of books are maintained, when separate set of books are maintained, as I told you, it is also known as joint banking method. It is also known as joint banking method. Joint banking method. It is also known as joint banking method. So how we are supposed to do the accounting under this particular method? Correct? Try to understand this particular point. We presume that in order to understand this particular method, let us say we presume that A and B are two co-venturers, or A and B entered into a short partnership. And the partnership is that they are going to construct, let us say, a bridge for government of Uttarakhand. Indirectly, it means A and B have entered into a contract with the government of Uttarakhand, government of UK. UK means Uttarakhand, not United Kingdom. So this time A and B have entered into a sort of contract with government of Uttarakhand. Number one. The government of Uttarakhand, which is giving the contract, will be known as contractee company. Will be known as contractee company. While A and B basically have entered into a partnership, a short partnership, A and B definitely will be known as separately co-venturer. A and B separately will be known as co-venturer, but we can also call them contractors, because this time they are working as a contractors, because they are constructing a bridge for the government of, let us say, Uttarakhand. Is it clear to you? As per the agreement, once the bridge will get completed, the Uttarakhand government will, let us say, provide rupees 50 lakhs as contract price. 50 lakh is your contract price. That means the moment bridge will get constructed, the government of Uttarakhand, which is the contracting party, will provide us 50 lakh rupees. Now, let us say A and B are very big contractors, and in order to keep their accounting, they have taken the services of an accountant. That means neither A, neither B is keeping any records. On behalf of their ventureship, they, let us say, a particular accountant is keeping the books. So that is why this method is known as when separate set of books are maintained. So accounting, as far as is concerned, let us say that is done by a third party accountant. So they have hired an accountant who is going to maintain the account on behalf of A and B. Is it clear to you? Generally under this method, what happens? A and B will initially contribute some amount. Correct? A and B are going to contribute some amount. Let us say amount contributed by A, rupees 10 lakhs, B, rupees 30 lakhs, and deposited in a joint bank. Generally under this method, what happens? The co-venturer will open a joint bank account, and the purpose of opening the joint bank account is just to reduce any sort of misconceptions, any sort of fraud, any sort of misunderstanding. Because when we have opened a joint account, unless and until we are going to sign the check, correct? Both, the check cannot be cleared. So that is why opening of joint bank account is considered better, so as to reduce the misunderstandings and the frauds also. So let us say you are given this particular transaction, that amount contributed by A 10 lakh and B 30 lakh, and this amount is deposited in a joint bank account. That is why this method is also known as joint banking account. So how the accounting is going to be done by the accountant? Now you presume as if you are the accountant of A and B. Correct? You are doing the accounting on behalf of these co-venturers. So how you are going to record these transactions? You are going to record this transaction in this manner. You are going to write an entry, joint bank account debit. Correct? Joint bank account debit. Then you are going to write co-venturer A, co-venturer B. Co-venturer A has contributed 10 lakh, while co-venturer B has contributed 30 lakhs. So total amount which they have contributed has been deposited in joint bank account 40 lakhs. So this is the entry the accountant is going to pass. You presume as if you are the accountant. So what is the entry when the co-venturer are going to contribute the amount? You are going to write in this manner the entry. Is it clear to you or not? Let us say, now they have contributed the amount. Quite obviously, they have to construct a bridge. And to construct a bridge, it is not a cup of coffee for everyone. We require huge amount of time and we require huge amount of expenditure. Isn't it or not? So, now let us say question further states, expenses incurred. Expenses incurred. Expenses incurred. You are given some information with respect to some expenses incurred. Let us say expenses incurred in the form of material, labor, correct? Architect fees, architect fee, engineer's fee. So lots of expenses, foreman salary, etc. Expenses could be in any manner. Let us say total amount of expenditure incurred is equal to 10 lakh. Total expenditure incurred, let us say, is equal to, in fact, 25 lakh. 25 lakh is the total amount of expenses incurred by both this co-venturer A and B. Obviously, they are going to construct the bridge, so they will have to incur some expenses, isn't it or not? So what will be the entry now? Normally in practical life, try to understand, whenever expenses are incurred, we generally write the entry expenses account debit to cash account. This is the normal entry in accounts I am talking about. But however here, whatever expenses which we are going to incur, these expenses are meant for joint venture. These expenses are meant for joint venture. So instead of separately debiting material account debit, labor account debit, architect fee account debit, engineer fee account debit, instead of debiting separately, we simply will write joint venture account. Correct? So my entry in this particular case for the expenses will be joint venture account debit. Joint venture account debit. Joint venture account debit. I told you, generally we write the entry expenses account debit to cash. But now instead of cash, I will write to joint bank. Because whatever expenses we are going to incur, those expenses will be incurred through joint bank account. So that is the entry which you are going to write. You are not going to write material to cash, labor to cash, architect fee account debit to cash, or engineer fee account debit to cash. In fact, all the expenses will be debited to joint venture account. So 25 lakh worth of expenses you have incurred, and this is the entry which you are going to pass. Correct? Let us say I give you further information. See, sometime what happens, a particular co-venturer will supply the material out of its own resources for the purpose of what we call joint venture. Let us say here I have written material worth 5 lakhs supplied by Mr. A. Directly or indirectly, it means these expenses have been incurred by A for the purpose of joint venture. So sometime a co-venturer will supply the material for the purpose of joint venture. In that case, what entry you are going to pass? In that case, your entry will be joint venture account debit. Because again, these material are meant for joint venture. So you are going to debit the joint venture account. And now, these expenses are not incurred by this firm. In fact, these expenses have been incurred by A. So you are going to credit Mr. A account. Is it clear to you or not? So this is how you are going to pass the entry if material or any expenses are borne by a particular co-venturer. Is it clear to you or not? Is it clear? Now, once the contract will get completed, that means in this particular case, when the bridge will get completed, the contracting company will pay the amount. So receipt of contract amount, receipt of contract price. The contract price was 50 lakhs. When you are going to receive the contract price, what will be your entry? Our entry will be joint bank account debit. Joint bank account debit. Because we are receiving the cash now, but we are not going to write cash. We are going to write joint bank. And because it is a gain to us, so joint venture account will be credited. And how much we are going to receive? We are going to receive the contract price of 50 lakhs. Is it clear to you or not? Is it clear? Now, because the contract is completed, and we know now the co-ventureship will come to an end. The partnership between these two co-venturers will come to an end the moment we are going to complete the project. Now, sometime what happens, some remaining materials, correct, some leftover materials are taken over by a particular co-venturer. E. Let us say leftover material taken over by Mr. B. By Mr. B. Rupees 10 lakhs. So 10 lakh worth of material has been taken over by Mr. B. So if it is given in the question that some leftover material has been taken over by a particular co-venturer account, your entry in this particular case will be, because Mr. B is taking over the material, so you are going to debit Mr. B. You are the accountant of this particular firm, correct? This particular firm is this particular co-ventureship. So B account debit. And from the point of view of joint venture, it is a gain, because your leftover material are being taken over by a particular co-venturer. That means your material which were left were taken over by a co-venturer. So it is almost like unused material now sold by your co-ventureship. So that is why it is considered as a sort of gain, and you are going to credit the joint venture account. So 10 lakh. So generally these are the entries which we are supposed to pass under this particular method. So under this particular method, co-venturer are going to take the services of an accountant. That means they are going to keep the books separately, and so that there is no what we call a fraud, there is no misunderstanding, no misconception. They are going to open a joint bank account. Is it clear to you? These are the special criteria. Now, just to make the point a little bit more clear, we have already passed the entries, correct? So under this method, we will see that basically we are supposed to prepare three types of accounts, as you must have noticed. One is known as joint venture account. As far as ledger account is concerned, we are supposed to prepare joint venture account, correct? As far as ledger account is concerned, under this method, we are going to prepare a joint venture account, and we will see that joint venture account is a nominal account, and it is prepared to find out loss or profit in the joint venture account. Besides joint venture account, we are going to prepare the co-venturer account. Co-venturer, as we normally prepare partners account, under joint venture, we are supposed to prepare co-venturer account. And in this case, we have seen there are two co-venturer. One is Mr. A, another is Mr. B. So this is how we are going to prepare co-venturer account. And then finally, we are going to prepare another account that is known as joint bank account. Joint bank account, which is synonymous with your cash account. joint bank account. This is our joint bank account. Clear? Not very tough one. Now, let's come back. The first entry was that the A and B, they actually contributed some amount. And we wrote the entry joint bank account debit to A and B. So in the entry, we can see that joint bank account is getting debited. So in the ledger account towards the debit side of joint bank account, I'm going to write here 2A. A has contributed 10 lakh, while B has contributed 30 lakh. So our joint bank account will increase because of their contribution. Since we have written on the debit side of joint bank account 2A and B, on the credit side of A and B, we will write by joint bank account. Very simple. I have already told you, this chapter is very simple chapter. 10 lakh and 30 lakhs. Clear? This is how we are going to pass the first entry. So this is how we are going to post the first entry. Second entry or second transaction was related to expenses. And I have already told you, under joint venture, we are not going to write the entry as we normally do in normal accountancy. For example, in normal accountancy for material, we pass the entry material account debit to cash account. Similarly, for labor expenses, we pass the entry labor expenses account or wages account debit to cash account. Similarly, for architect fee or engineer's fee, we pass the entry of architect fee account debit, engineer fee account debit to cash account. But here, all the expenses will be debited to joint venture. So our entry is joint venture account debit to joint bank. Joint venture account is getting debited. So towards the debit side of joint venture account, I am going to write to joint bank account. Correct? I will write here to joint bank. I can write in bracket expenses. Total expenses 25 lakh, which we have written towards the debit side of joint venture account. And because joint bank account is getting credited, so on the credit side of joint bank account, I will write by joint venture. And I can write here as expenses, if you want to show, 25 lakhs. So this is how second entry will be posted. And third entry was again related to expenses, but this time expenses in the form of material are borne by Mr. A. And you wrote the entry joint venture account debit to A account. Whatever expenses are there, those expenses will be debited to joint venture account. However, now I am going to write here joint venture account debit to A account. In bracket, I can write material because A has supplied the material. And A has supplied the material worth rupees 5 lakh. So I am going to write here 5 lakhs. Correct? And because on the debit side of joint venture, we have written 2A, quite obviously we are going to cross it to the credit side of A. So in the co-venturer account, in the column of A towards the credit side, I am going to write by joint venture. That is 5 lakhs. That is 5 lakhs. Correct? Now, point number D. Now contract is completed and we are going to receive the contract price. The entry will be joint bank account debit. So joint bank account is getting debited and joint bank account is getting debited due to joint venture. I will write here to joint venture. So 50 lakh rupees we have received. I will write here 50 lakhs. And towards the credit side of joint venture account, I am going to write here by joint bank. By joint bank. You can write in bracket contract price. Contract price. Total amount is 50 lakhs. Correct? Now the last entry is which I talked about when some material are left. So these material are of no use. So generally a particular co-venturer agrees to take them over. The entry will be respective co-venturer account debit to joint venture. In this case, B has taken over. So your entry will be B account debit to joint venture, isn't it or not? So B account is getting debited. On the debit side of B, I am going to write here joint venture. Because B is taking over some material, leftover material to the extent of 10 lakh. So towards the debit side of B, I am going to write 10 lakh. Correct? And on the credit side of joint venture, I am going to write by B. You can write material taken over. Material taken over, T/O, 10 lakh. So all the transactions have been incorporated. Once all the transactions have been incorporated, then you are going to tally your joint venture account. And once you are going to tally your joint venture account, correct? Then you are going to tally your joint venture account. So 60 lakh credit side is bigger. So my balancing figure is 60 lakh minus 30 lakh. So 30 lakh is the profit. So in a quick time, we are able to get a profit of 30 lakh. This profit will be transferred to co-venturer account. Profit transferred to A and B. Now, in the example, I haven't written what is their profit sharing ratio. Suppose if it would have been given that co-venturer are going to share the results in the ratio of 2:1, I would have divided 30 lakh in the ratio 2:1. However, if ratio is not given, we will presume that profit sharing ratio is equal. So 15 lakh, they are going to share the profit. So this co-ventureship will come to an end. Now, you have written 2A and B. In the joint venture account, you have written 2A and B. Quite obviously, you are going to take it to the credit side of A and B. And you are going to write here by joint venture, profit. Share of profit of A is 15 lakh. Share of profit of B is 15 lakh. Now you are the accountant of this co-ventureship. So when you will prepare the account and finalize them, you will tell to Mr. A that in your account, because this is the credit side, correct? This is our credit side and this is our debit side. And credit side is bigger. So you will tell to Mr. B that Mr. A that total of your credit side is 30 lakh and which is bigger. So balancing figure is 30 lakhs. That means we will pay you 30 lakh rupees. So after the end of the co-ventureship, whatever balance will be there in the co-venturer account, accountant will pay the co-venturer that respective balance. So entry will be A account debit to joint bank account. It is also known as final payment. Similarly, total of credit side of B is 45 lakh minus 10 lakh. The balance is 35 lakh. So Mr. B will be paid 35 lakh to joint bank. So co-venturer's account will get closed and we will cross, because we have written here joint bank. So we are going to cross them over to the joint bank account and I'm going to write here by A, final payment 30 lakhs and by B, final payment 35 lakhs. Now we are going to tally our joint bank account. And our joint bank account must get tally of its own. For example, 30 plus 50, 80 plus 10, 90. 90 lakh is total of debit side. And here also total is 90 lakh. So you have seen that our joint bank account is getting tallied of its own. So this is how we are going to do the accounting as far as joint banking method or when separate set of books are maintained is concerned. Is it clear to you or not? So if it is clear to you, and now we are in a position to attack the first question. Let's have a look over it. So now we pick up the first question, correct? Now in this particular question, it is given that Monty and Snooty undertook the construction of a cinema hall for a payment of 3 lakh. So Monty and Snooty undertook a construction of a cinema hall. Monty and Snooty will be known as co-venturer. What is the project they have undertaken? Construction of cinema hall. What is the contract price? 3 lakh. They have taken a construction of cinema hall for a payment of 3 lakh means the contracting party, that means the party from whom they have taken the contract will pay them 3 lakh once the cinema hall will get what we call completed. For this purpose, Monty put 60,000, Snooty put 50,000 in a joint bank account. This line suggests that this particular question belongs to this particular method. That means here you will have to apply joint banking method. That is when separate set of books are maintained. So this joint bank account was specially opened, correct? And now the next information is following expenditures were incurred. Material 37,500, wages 60,000, plant 7,500. So total expenses we have incurred. So what will be our entry for all these expenses? What will be the entry? Joint venture account debit to joint bank account. You are going to write this entry for expenses. For expenses, isn't it or not? These payment were made out of joint bank account. Obviously, when we are doing the joint banking method, so we will presume that whatever payments are being done, those payments are being done through joint bank. In addition, in addition to these expenses, question says that Monty supplied bales of cement which were valued at 7,500. So this expense, as in the last case, material supplied by A was there. So this time Monty is also supplying some cement bales valuing 7,500. And the entry for this will be joint venture account debit to Monty account. Joint venture account debit to Monty account 7,500, 7,500. Is it clear to you or not? And if I will add all these expenses, it is equal to 1,05,000. For expenses, your entry will be joint venture to joint bank. The cinema hall was constructed, but due to certain defects, the contracting party deducted rupees 60,000 from the payment which was made gradually. As per our initial agreement, the contracting company was supposed to pay us rupees 3 lakh. Contracting company was supposed to pay us rupees 3 lakh. Isn't it or not? Contracting company was supposed to pay us rupees 3 lakhs. But after cinema hall was constructed, quite obviously the contracting company is going to have an inspection of that. And suddenly they found that there are some defects. So they did not pay us 3 lakh. In fact, they subtracted 60,000 from the agreed payment and paid only 2,40,000 to us. That is the meaning of this particular sentence. The cinema hall was constructed, but due to certain defects, the contracting party deducted 60,000 from the payment which was made gradually. Correct? The plant was taken over by Isnuti for rupees 4,000. As I told you earlier, correct, sometime the leftover things are taken over by co-venturer. So Isnuti has taken over some plant. So entry for this will be joint venture account debit to Snooty account. Joint venture account debit to Snooty account. So 4,000 worth of plant is taken over by Snooty. And similarly, the bales of cement left were taken by Monty at rupees 2,000. Actually, there is a misprint, right? 2,000. At rupees 2,000. So another entry you will have to pass joint venture account debit to Snooty account, and Snooty has taken over bales of cement for rupees 2,000. Further, it is given they shared profits and losses in the ratio of 2:1. So this time it is clearly given what we call their ratio. Ratio is 2:1. Is it clear to you or not? So as usual, first of all, what I am going to do, I am going to actually, just because this is the first question, although I have solved the question in a very neat and clear manner, but still these are initial questions. So as I told you, first of all, I will have to prepare a joint venture account. Correct? This is the joint venture account. So joint venture account we have prepared. Besides the joint venture account, as I told you, we will have to prepare the co-venturer account. So I will prepare co-venturer account. In the co-venturer account, we have two co-venturer in this case. One is Monty and another one is Snooty. Monty and Snooty, not Scooty, Snooty. Monty and Snooty. Correct? And as I told you, besides that, we will have to prepare a joint bank account. So here I will prepare a joint bank account, just to make the point clear. So these are the accounts which we are supposed to prepare. Now, first of all, it is given in the question that Monty put 60,000, Snooty put 50,000. What will be the entry? In the examination, you are not supposed to pass the entry unless and until they are asked. But generally, they ask you only the ledger accounts. However, entry for this will be joint bank account debit. Whatever contributions Monty and Snooty are going to make, those contributions are 60 and 50 and they have been put in a joint bank account. So this is your first entry. Correct? In the joint bank account, you are going to write, as we wrote earlier, correct? We are going to write here to Monty and to Snooty. Monty is contributing 60,000 and 50,000 is being contributed by Snooty. So I will write towards the debit side of joint bank account to Monty and to Snooty. And quite obviously towards the credit side of co-venturer account, I am going to write by joint bank 60,000 and 50,000. This is how I am going to pass the entry. Is it clear to you? This is the first entry. Second entry was with respect to the expenses which this co-ventureship incurred. 37,500 on material, on wages 60,000, on plant 7,500. However, we are going to write the entry joint venture to joint bank and the total will be 1,05,000. Because joint venture account is getting debited. On the debit side of joint venture account, I am going to write to joint bank. I will write in bracket expenses. Total expenses incurred 1,05,000. I will write here 1,05,000. Because on the debit side of joint venture, we have written to joint bank. Towards the credit side of joint bank, I am going to write by joint venture. In bracket expenses. Sorry, 1,05,000 total. After this, it was stated in the question that Monty supplied bales of cement which were valued at 7,500. That means Monty is incurring some expenses on behalf of joint venture. So your entry will be joint venture to Monty. Due to climate change, no, throat is not well, sorry. So joint venture account debit to Monty. So I will write here to Monty. You can write in brackets cement bales. That means Monty has supplied some cement bales. $7,500. Because we have written here to Monty, towards the credit side of co-venture account, I am going to write by joint venture. In the column of Monty, I am going to write 7,500. Is it clear to you? Next entry is cinema hall was constructed, but due to certain defects, the contracting party deducted 60,000 from the payment which was made gradually. That means they paid 2,40,000, but they were supposed to pay us 3 lakh, but they paid only 240 because they subtracted 60,000. So when we are going to receive the payment, our entry will be joint bank account debit to joint venture account. And the entry will be with 2,40,000. So on the credit side of joint venture, we are going to write by joint bank. We can write here contract price. So we are receiving not 3 lakh, we are receiving only 2,40,000. I will write 240. On the debit side of joint bank account, I will write here to joint venture. Contract price 2,40,000. Correct? Now, question says that the plant was taken over by Snooty. The plant was taken over by Snooty. So plant is taken over by Snooty. My entry will be joint venture account debit to Snooty. Amount will be 4,000. Joint venture to Snooty. So actually this entry should not be joint venture to Snooty, just because plant is being taken over. Just let me rectify it. Entry will be Snooty. Snooty is taking over. Snooty account debit to joint venture. So this will be your entry 4,000, 4,000. Snooty has taken over some plant, correct? So Snooty account will get debited. So on the debit side of Snooty, I am going to write here to joint venture. On the debit side of Snooty, I am going to write 4,000. and joint venture account is getting credited. On the credit side of joint venture, I will write by Snooty. I can write here plant. That means Snooty has taken over leftover plant for rupees 4,000. Similarly, one more line is given that the bales of cement left were taken over by Monty at a value of rupees 2,000. So, your entry in this particular case will be, because now Monty is taking over, Monty account debit to joint venture account, and Monty is taking over leftover cement bales for rupees 2,000. So, Monty account is getting debited. So, this time Monty account is getting debited. So, we are going to write towards the debit side of Monty to joint venture 2,000, and in the joint venture account, I am going to write by Monty, that is cement bales. Cement bales. And cement bales are worth rupees 2,000. This is how I am going to pass the entry. Is it clear to you or not? So now everything is over. So now we are in a position to tally our account. Correct? Is it clear to you? Now we are in a position to tally our account. Now you can directly have a look over here. Correct? These are the accounts which we have already prepared. So this is just to make you understand. So you have already seen that in the joint venture account, we have written to joint bank, 1,05,000. We have written to Monty. Monty has supplied 7,500 worth of goods to us. So these are the two things we have written on the debit side, and on the credit side, 1, 2, 3. So by joint bank, that is 2,40,000 we have received, and by Snooty has taken over the plant, and 2,000 by Monty. So credit side total will be 2,46,000. From 2,46,000, you are going to subtract 1,12,500. You will get a balancing figure of 1,33,500. Now this 1,33,500 will be divided in the ratio of 2:1 between Monty and Snooty. So you have written here 2 Monty, 2 Snooty. So in the co-venturer account, these are the co-venturer account. In the co-venturer account, we have written by joint bank their contribution. By joint venture, Monty has taken over what we call, Monty has supplied some material, if you remember, and then their share of profit. On the debit side, Monty has taken over 2,000 worth of cement bales, and Snooty has taken over some plant. So whatever balancing figure will be there, that will be paid to them. Is it clear to you? And similarly, whatever payment we have made, we are going to write it towards the credit side. Is it clear? And as you can see in the debit side of joint bank, we have written the contribution and the consideration which we have received, and these are the expenses. So that is how joint bank account will automatically get tallied. Is it clear to you or not? Is it clear? Now we can move over to the next question. Demonstration problem, joint banking method. This time A and B doing business as building contractors, and they have undertaken jointly to construct a building for a limited company for a contract price of 1 lakh, payable 80,000 in cash and 20,000 in fully paid shares of the company. This time we have taken a contract from a company. Company is the contracting company. Company has given a contract to us, correct? And A and B are the contractors. And company is telling that once the contract will get completed, we will pay you 1 lakh. No doubt, contract price 1 lakh. Company will pay contract price 1 lakh. But because it is a case of company is telling that we are going to pay you in cash 80,000 rupees. And balance we are going to pay you by way of shares. That means company is not going to pay entire 1 lakh in cash. So company is telling as to A and B that we are going to deliver out of 1 lakh 80,000 worth of cash, and rest we are going to actually offer you shares worth rupees 20,000. So this is how we are going to receive the contract price. Whenever in the question it will be given that contract price, some portion is paid in cash and some portion is paid in shares. Under such questions, besides these three accounts, joint venture account, joint co-venture account, joint bank account, you are supposed to prepare the shares account also. Is it clear to you? So this time I will prepare one additional account in the form of shares account. Is it clear to you or not? Yes, sir. So if it is clear to you, let's go through the question. Now question says that a joint bank account is opened in the name of A, wherein A paid 25, B paid 15,000. I need not require to tell you what will be the repercussion of this particular transaction. A is paying 25,000 and B is paying 15,000. What will be your entry? Joint bank account debit to A and B. That means in joint bank account and in co-venturer account, you are going to pass this entry. Further, it is given their result, they are going to share in the ratio of 2:1. And in this case, it is given that wages have been paid 30,000, material purchased 30,000. So that means total expenses incurred by co-ventureship is equal to 1 lakh, 30 plus 70. Whereas it is given that material supplied by A 5,000 and architect fee. That means material supplied by A and architect fee paid by A. That means these two expenses are borne by A. So your entry for these two expenses will be joint venture account debit to A account. That is 5 plus 2, 7,000. Whereas for 4,000, material supplied by B, entry will be joint venture account debit to B account. B has incurred expenses. So this is how you are going to pass the entry. Entry for this 1 lakh will be joint venture account debit to joint bank account. So this is how you are going to pass the entry. Now question says that contract price was completed and cash price received in cash and shares were duly received. So when contract price will be received, we are going to pass the entry joint bank account. Whatever portion which we have received in cash, we are going to debit joint bank account. And then we are receiving some shares also, so we are going to debit shares account also. To joint venture account. That is 1 lakh. Is it clear to you or not? So joint bank account debit, shares account debit to joint venture account 1 lakh, 1 lakh. Is it clear? So this is how we are going to pass the entry for this. Now further the question says that joint venture was closed by A taking up all the shares of the company at an agreed value of 16,000 and B taking up stock of material at an agreed value of 3,000. I have already told you, if any material or unsold assets are taken over by a co-venturer, in that case, co-venturer will be debited. For example, B will be debited and to joint venture. So B has taken over remaining stock, so your entry will be 3,000. If any co-venturer takes over leftover material, correct, or any asset, then you are going to debit the co-venturer account. But in this case, your company has received some shares. And now question says that A has taken over those shares at rupees 16,000. A has taken over those shares. So, I am going to write A account debit. But I am not going to write to joint venture. If shares are taken over, in that particular case, 16,000 worth of shares have been taken over by A. So, entry will be A account debit and you had received shares worth rupees 20,000. So 20,000 you are going to write. So 20,000 worth of share. See, you are the chief accountant of their co-ventureship. Correct? As a chief accountant, your firm, you consider as if you are the accountant of this firm, this co-ventureship. So you have received 20,000 from the company. That means your firm has received 20,000 worth of shares. And those 20,000 worth of shares have been taken over by one of the co-venturer as 16,000. That means there is loss of 4,000. And this loss will be transferred to joint venture account. This loss will be transferred to joint venture account. So we will write A account debit, joint venture account debit to shares. So in case of shares, because we have received the shares, so shares, in order to close the share account, I will have to credit them. So that is why if any shares are taken over, we will not write the entry co-venturer account debit to joint venture account as we write in case of assets or in case of other things which are taken over by co-venturer. For example, B has taken over material. I have written here B account debit to joint venture. But when shares are taken over, I haven't written A account debit to joint venture. I have written A account debit to shares account, and the difference will be debited to what we call joint venture account, and this difference will be considered as a sort of loss. Is it clear to you or not? Is it clear? So these are the things. In case of shares, you will have to be little bit what we call more clearer regarding this particular point. So first I will prepare the joint venture account just to make the point a little bit more clearer to you. This is our joint venture account, correct? This is our joint venture account. And then we are going to prepare the co-venturer account. This is our co-venturer account. Co-venturer account. And there are A and B. And then we will prepare the joint bank account also. This is our joint bank account. And in this case, I will have to prepare shares account also. I will have to prepare the shares account also. Is it clear to you? So we shall start with the contribution. So in this particular case, A paid 25, B paid 25. You know the entry joint bank account debit to A and B. So on the debit side of joint bank account, I am going to write A to B, that is 25,000 and 15,000. A has contributed 25, B has contributed 15,000. This is the entry we are going to write. On the credit side of co-venturer, I am going to write by joint bank account 25,000 and 15,000. Is it clear to you? Is it clear? Yes, sir, clear. Now, next entry is with respect to expenses. I've already told you out of these expenses, 1 lakh worth of expenses have been incurred by co-ventureship. Entry will be joint venture account debit to joint bank. So on the debit side of joint venture account, I will write to joint bank expenses 1 lakh. Expenses 1 lakh, correct? And on the credit side of joint bank account, I will write by joint venture account expenses 1 lakh. Then our next entry was material supplied by A and architect fee paid by A. So total amount or total expenses incurred by A on behalf of joint venture is 7,000. Entry will be joint venture to A account. On the debit side of joint venture, I will write A. So A has supplied material and he has paid architect fee. You can mention it also, and in the outer column 7,000 I will write. And in the column of A, I am going to write by A 7,000. Correct? Then it is written material supplied by B. Entry will be joint venture account debit to B account. On the debit side of joint venture, we will write B. You can write material 4,000. And in co-venturer account, you will write by joint venture. You can write here 4,000. Correct? Now, after this, contract was completed and contract price is received. When contract price will be received, we are going to pass this entry. Joint bank account debit, shares account debit to joint venture. So on the credit side of joint venture, I will write by joint bank. That means the portion which is received in cash. Correct? We are not going to debit cash. We are going to write joint bank 80,000. Then shares account debit, that is equal to 20,000. And on the debit side of joint bank, we are going to write to joint venture 80,000. And on the debit side of shares account, we are going to write to joint venture, that is equal to 20,000. 20,000. Is it clear to you? After this, it was given that these 20,000 worth of shares, have been taken over by A for 16,000. So that is why there is a loss of 4,000. Entry is A account debit, joint venture account debit to shares account. So A account is getting debited. On the debit side of A, I am going to write 2 shares. 16,000 worth of shares taken over by A. Correct? Joint venture account is also getting debited. On the debit side of joint venture, I will write 2 shares. You can write in bracket loss on taking over of shares by A. So 4,000 worth of loss. On the credits and shares account is getting credited by 20,000. So you will write here by A 16,000 and by joint venture 4,000, because shares account is getting credited due to A and joint venture. So shares account is closed. Correct? And now last thing is that some leftover material were taken over by B. So you will write towards the credit side by B. You can write here material, and 3,000 worth of material taken over by B. On the debit side of B, you are going to write to joint venture 3,000. So ultimately, this is how you are going to do this particular question. Now you will have to compute the amount of profit, transfer the profit to A and B, and then balance it, and then pay off A and B. This is exactly what we have done here. Your credit side this time, see here, this is your joint venture account. Correct? Total expenses to joint bank 1 lakh, material supplied by A and supplied by A, that is total 5 plus 2, 7,000, material supplied by B 4,000, and 2 shares loss. So our debit side total is bigger, and on the credit side we have written joint bank 2 shares, material taken over by B. So our total loss is 12,000, and this 12,000 worth of loss is divided in the ratio of 2:1, 8,000, 4,000. Correct? In the co-venturer account, you are going to transfer the loss to the debit side of A and B. In A and B, we have written the contribution. We have written what we call by joint venture 7,000 and 4,000. As you can see here, we have written 7,000 and 4,000. Correct? So credit side total 3219. And this is the balancing figure 8,000, 12,000. 8,000 loss we have written, and B has taken over some material 3,000. A has taken over some shares. So final balance 8,000, 12,000, which you are going to pay them off. Then finally your this particular account will get tallied. Is it clear to you or not? Yes, sir, it is absolutely tallied. So after having done this particular question, now let's have a look over this particular question. Let's have a look. Try to attempt it of your own. Correct? I am giving you 5 minutes of time. So we will take 5 minutes of rest, or 10 minutes. Within 10 minutes, you should be in a position to do this question. So I hope that you might have given it a try. Correct. Anyway, still I will do it for you. In this particular case, it is given that P and M entered into a joint venture for purchase and sale of defense disposal. They agree to share profits in the ratio of 2:1 respectively. The following transactions took place. So now, just to make the point a little bit more clearer, I will prepare a joint venture account. This is the joint venture account, correct? And besides the joint venture account, I will prepare this time co-venturer account. There are two co-venturers. So co-venturer account. Co-venturer account. Correct? Just wait. I think now it's okay. So co-venturer account, now we are going to prepare. This is the co-venturer account, correct? Co-venturer P and M are there in this particular case. One is P, another one is M. P and M. Then question says that we are also supposed to obviously prepare joint bank account also, which I will prepare here. Joint bank account also. Okay. Now in this question, the first information is that P and M paid into bank 72 and 36. Now, P paid 72,000. M paid 36,000. So first of all, joint bank account debit to P account to M account. On the credit side, I will write here by joint bank. I will write here 72,000 and 36,000. Correct? 72,000 and 36,000. Then we are given some information with respect to P paid rent of the shop. Now this expense, paid rent of the shop. It is given only paid rent of the shop. So your entry will be joint venture account debit to joint bank account. You will write here to joint bank. You can mention it rent in this manner. And amount will be 1,200. Then you will move over to joint bank. You will write here by joint venture. You will write 1,200. Similarly, next point is that you have purchased goods for cash 72,000 and paid freight 73. Your entry will be joint venture account debit to joint bank account 73,000, 73,000. So on the debit side of joint venture, you will write to joint bank. Correct? You have purchased goods and paid freight. Goods 72,000 and freight 1,000 you can show separately. That's a different matter. Total 73,000. Correct? On the credit side of joint bank account, you are going to write by joint venture 73,000. Then you are given in this particular case, P paid rupees 200 from his private expense. Your entry will be joint venture account debit to P. So this expense has been borne by P. Entry will be joint venture to P. So P has paid 200. And on the credit side of P, I will write by joint venture. In the column of P, I will write 200. Then we are given that sold goods and money deposited in joint bank. So we have received some money in this case by joint bank, sales, 39,200 worth of sale we have incurred. Amount deposited in joint bank. On the debit side of joint bank, we are going to write to joint venture 39,200. 39,200. Is it clear to you? The next line which is given to us is sold goods for cash again. So again I am going to write here by joint bank. Again we are going to write here by sales, and amount will be 52,000. And on the debit side of joint bank, we are going to write to joint venture, that is 52,000. That is 52,000, correct? Then we are given that purchased goods for cash 12,000, sundry expenses incurred by M from his private account. Goods have been purchased for cash. Entry will be joint venture account debit to joint bank. You have purchased some goods, 12,000. And then in the joint bank account, you will write by joint venture, 12,000. And it is also written that M has incurred some expenses on behalf of joint venture account debit to M account. Entry will be to M account. And M has incurred some expenses to the extent of 120. So, by joint venture in the column of M, I will write 120. Is it clear to you? Then sold goods again for rupees 28,000. So, again we are going to write here by joint bank. Again we are going to write here by sales. We are going to write here 28,000. Then in the joint bank account, we will write here to joint venture 28,000. 28,000, correct? Then we are given P took over the balance of the goods left unsold at rupees 8,000. So P account debit to joint venture. On the credit side of joint venture, we will write P unsold goods have been taken over by P. For rupees 8,000, we will write here 8,000, and on the debit side of P, I am going to write to joint venture 8,000. Now, all you have to do is just balance it, find out your profit. Your profit must be equal to 40,680. This profit must be transferred to P and M in the ratio of 2:1 as it was given in the question. So 40,680 divided by 3, 13,560 share of M, and into 2 will be share of Mr. P, 27,120. So this profit will be transferred to co-venture account. You are going to write by joint venture 27,120 and 13,560. Then you are going to balance these account, and whatever balance will be there, you are going to write by joint bank 91,320 and 49,680. 49,680. And then final payment will be written here by P 91,320 by M 49,680. And then this account must get closed of its own. Is it clear to you or not? Question number 4, you can easily manage of your own. Just I'm giving you a sort of hint. X and Y carrying on business, contractors jointly undertake the work of constructing a building at an agreed price of 3,50,000, payable in cash 2,40,000, and in fully paid shares of the company for rupees 1,10,000. So out of 3,50,000 contract price, 2,40,000 will be received in cash and 1,10,000 in shares. So you will have to prepare share account. X and Y paid 75,000 and 50,000 respectively in a joint bank account. Correct? So those three accounts you will have to prepare here also in this particular case. This is your joint venture account. This is your joint venture account. Correct? And then after preparing your joint venture account, this is your joint venture account. Then you can prepare your joint bank account also. This is your joint bank account. And then you can prepare the co-venturer account also. This is your co-venturer account. Correct? There are two co-venturer in this particular case, co-venturer X and Y. X and Y. Joint venture account. So first of all, it is written that they have contributed 75 and 50. So towards the debit side of joint bank account, you will write 2X and 2Y. So X has contributed how much? 75,000 and Y has contributed this much. Joint bank account debit to X to Y. This is the entry you are going to write. Is it clear to you? And in the co-venturer account, towards the credit side, you are going to write by joint bank 75,000 in the column of X and 50,000 in the column of Y. Then all the expenses which you have paid in cash, wages paid, material purchase. So total 3 lakh worth of payment you have made in cash. So your entry will be joint venture account debit to joint bank account. Material 90,000 and material, this is actually wages. Wages 90,000 and material purchased for cash 2,10,000. So total expenses 3 lakh. Joint venture account debit to joint bank. So on the credit side of joint bank account, you are going to write by joint venture, that is equal to 3 lakh. Then it is given that material supplied by Y. So joint venture account debit to Y account. So Y has supplied some material worth rupees 27,000. And similarly, consulting engineer fee paid by X. So we will write joint venture account debit to X account, engineer's fee, that is equal to 6,000. So we will cross it to co-venturer account. On the credit side of co-venturer account, we will write by joint venture 27,000 in the column of X and 6,000 in the column of Y. Is it clear to you? Yes, sir, it is clear. So after this, it is given X agreed to take over the shares at 48. But before that, you will have to pass the entry for receipt of contract price. The portion which you are receiving in cash, will be debited to joint bank account, and we are receiving 2,40,000 in cash. And we are receiving in shares 1,10,000. So 1,10,000 to joint venture account. First of all, I will pass this entry because joint venture account is getting credited. So on the credit side of joint venture, I will write by joint bank 2,40,000. And on the credit side of joint venture, I will write shares 1,10,000. Because on the credit side of joint venture, we have written by joint bank, on the debit side of joint bank account, we will write to joint venture 2,40,000. Clear? And we will have to prepare a shares account also. Shares account. In the shares account, I will write towards the debit side to joint venture account. That is equal to 1,10,000. 1,10,000, correct? This is how we are going to pass this particular. This is how we are going to do this particular question. Now, after this, what you are supposed to do? After this, what you are supposed to do? It is written now that X agreed to take over the shares. Because X is taking over the shares, so you are going to debit X. He is taking over the shares only for 48,000. However, you received shares for rupees 1,10,000. That means shares worth 1,10,000 have been taken over by X for rupees 48. So there is a loss. That loss is debited to joint venture account. So this is the entry you are going to write. X account debit 48, joint venture account debit 72 to shares account. So shares account, it's getting credited. So you will write here by X 48,000, and you are going to write here by joint venture. By joint venture, that is equal to 72. So these shares have been taken over by X at 48. So loss of 72 has taken place. Because X account is getting credited in the shares account, on the debit side of X, you will write here 2 shares, 48,000. Is it clear to you? 48,000. And this loss will be debited to joint venture account. You will write here 2 shares. You can write in bracket loss on taking over of shares. Loss on taking over of shares. So 72,000 worth of loss has taken place. This is how you are going to pass the entry for this. Further, it is given that Y agreed to take over the remaining stock at rupees 9,000. So when remaining stock will be taken over, your entry will be Y account debit to joint venture account. So on the credit side of joint venture account, you are going to write by Y, and Y is taking over remaining stock at 9,000. On the debit side of Y, you will write to joint venture 9,000. After this, now you will have to just tally this account. When you are going to tally this, you will find a loss of 36,000. This loss will be posted to X and Y in the ratio of, I think, 2:1, because it was given in the question, I think. Was it given in the question? Following is the cost. I think it is not given in the question regarding their losses, share of loss. Right. If it is not given in the question, then we will transfer them equally. So we will transfer equally because it is not given. 18,000, 18,000. Now this 18,000 worth of loss will be debited to co-venturer account. In the co-venturer account, you will write here joint venture loss 18,000, 18,000. And then you are going to make the final payment. As far as final payment is concerned, 75 plus 27 minus 48 and minus 18. The final payment, joint bank, 36,000, and final payment of this will be equal to 56 minus 27, that is 29,000. Then final payment you are going to write here by X 36,000 and by Y 29,000. Then you will tally this 29 plus 36, 36 plus 29 plus 300. 365 is the total of this, and total of this one is equal to 240 plus 50 plus 75, that is also 365. So you just rectify these. In case if it is written 9,000, it should be 36 and this should be 29. Total is okay, 365, 365. So this is how you are supposed to do this particular question. And as far as question number 5 is concerned, just pay attention. It is given D and R doing business separately as building contractors, and they undertook to construct a building for a contract price of 13,40,000. This is similar to last question. 8,40,000 you will receive in cash, and balance you are going to receive by way of shares. So entry for the same, whenever you are going to receive, your entry will be joint bank account debit 8,40,000. This is the amount you are going to receive in cash. And shares, you are going to receive balance amount in shares, that is 5 lakh balance amount, and to joint bank. This will be the entry for receipt of contract price whenever you are going to receive. Profit sharing ratio this time given is 3:2. and contribution is given to you. So you can write the entry joint bank account debit to D to R. 450 and 2 lakh. Total 6 lakh. Then question says that amount advanced to suppliers for supply of material. Now this is an interesting question. Amount advanced to supplier for supply of material. Entry for this particular point will be supplier account debit. Supplier refers to a person from whom you are going to purchase the goods, that is generally creditor. So you have you have paid some advance amount. So supplier account debit to joint bank account, your entry will be 5,20,000. This is the entry you are going to pass, correct? Then value of material supplied by supplier. Now supplier has given you material worth rupees 8,90,000. Entry for this part will be joint venture account, because all the expenses, material is an expense, all the expenses will be debited to joint venture to supplier account. So supplier has supplied you 8,90,000 worth of material. 8,90,000 worth of material. That means you have given him a cash of 520 as advance, but he has given you 8,90,000 worth of material. That means you are still supposed to pay him some more amount. Further, it is given wages paid 360, material purchased 25,000. So entry for these two will be, entry for these expenses will be joint venture account debit to joint bank account. That is equal to 360 plus 25, 3,85,000. You are going to pass this entry, correct? Then architect fee paid by A. Architect fee paid by A. Your entry will be joint venture account debit to A account. 32,500. 32,500. Material supplied by B. Entry will be joint venture account debit to D account by 92. Value of stock lost by fire not covered. No entry. In case of joint venture, we never record abnormal losses. Reason is that because our partnership will come to an end immediately after the completion of the task. Generally, abnormal losses are recorded in the books because we are going to continue what we call even in the longer duration. So we want to know that if abnormal loss would not have had taken place, how much profit our firm would have had earned. So that is why generally under normal accountancy, we consider abnormal loss. But because in joint venture, we are not concerned with the future. What we are concerned is with the present moment. So this material have loss. So we are not going to keep track of that. Is it clear to you? No entry will be passed. Now question says that balance amount was paid to supplier. So what is the balance amount to supplier? See, you have received material worth rupees 8,90,000. And you have paid them an advance amount of 520. So difference of these two will be the balance payment. So for this, your entry will be supplier account debit to joint bank account. Supplier account debit to joint bank account. And this is the balance amount. The balance amount will be 8,90,000 minus 520. 3,70,000. So we are going to make a payment of 3,70,000 more to the suppliers. Is it clear to you or not? Then question says that contract price was completed and contract price is received. So you are going to pass this entry. Further, it is given that D took over all the shares for 4,70,000. After this, you are also going to write D account. D has taken over the shares for only 4,70,000. So there is a loss in the shares, 30,000 to shares account, 5 lakh. 5 lakh worth of shares taken over by D for only this much. So this is the entry you are going to pass. And then it is written that R took the balance of the stock of material for rupees 35,000 at an agreed value of 27,500. It is important at what value material are being taken over. So your entry will be R account debit to joint venture account 27,500. 27,500. Is it clear to you or not? Now suppose our first entry is with respect to contribution. So in the joint bank account, I will write 2D 450 and 2R 2 lakh. This is the amount which they contributed. And in D's account, in fact, I have prepared here D's account and R account separately. In D's account, I will write here 4 lakh 50. And in R's account, I will write here by joint bank 2 lakh rupees. Correct? This is the first entry which we have posted. Then we have written the entry. After this, we wrote the entry amount advanced to supplier. So we wrote the entry supplier account debit to joint bank account. Supplier account debit to joint bank. We will prepare a supplier account. In this supplier account, I will write to joint bank 5,20,000. And in the joint bank account, I will write by supplier advance payment 5,20,000. Is it clear to you? Then after that, we have passed the entry joint venture account debit to supplier because supplier has supplied 8,90,000 worth of goods. So in the joint venture account, I will write to supplier account 8,90,000. And because supplier account is getting credited on the credit side of supplier account, I will write by joint venture 8,90,000. Even from this particular account, you can see that there is a balance of 3,70,000. Ultimately, you will have to pay this balance. So you will pay this balance to joint bank 3,70,000, and in the joint, so supplier account will get closed, and in the joint bank account, you will write by supplier balance 3,70,000. Is it clear to you? Then after this, wages paid and material purchase, we pass the entry for this joint venture account debit. We pass the entry joint venture account debit to joint bank account. Here I have written joint venture account debit to joint bank account, material purchase 25. Just wait. I think I have wages paid, wages paid 360 and material purchase 25. It should be 385. It should be 385, material and wages. Material and wages is 385. Please, I think in your notes it will be okay. In case if it is not given, just write it 3,85,000. Joint bank account to material and wages 385, and in the joint bank account, material and wages 3,85,000. 3,85,000. Correct? And then we have been given architect fees paid 32,000. Architect fees paid 32,500. We presume that this particular fee paid by A actually. Architect fee paid by A, joint venture account debit to A account. So in the joint venture account, I will write here to A account. And you will write here to architect fee. Architect fee is 32,500. Architect fee is 32,500. And in the A's account, actually D and in this question, there are actually D and R partner. So you do one thing. You write here architect fee paid by R. I have written here A. Okay, no worry about that. Ultimately, we have to understand the question. No problem. Just wait. Just wait. In fact, in this question, it is given wages paid, material purchased, and architect fees paid. Correct? So, we will add all these expenses first instead of rectifying the question. So, 3,60,000 plus 25 plus 32,500. Your this entry joint venture account debit to joint bank, you increase it by this amount will be equal to 360 plus 25,000 plus 32,500. That is 4,17,500. You make it 4,17,500. No worry. Joint venture account debit to bank account. Correct? Here you write to joint bank, and this entry for material, for wages, and for architect fee, because nothing is written in this question whether architect fee is paid by any co-venturer. So we will presume even architect fee has been paid by the co-ventureship. Anyway, we are not concerned with that. Important point is 4,17,500. We will write here 4,17,500. And when you will prepare the joint bank account, in the joint bank account, we will write by material, wages, and architect fee. So it is okay. This total will be equal to 4,17,500. Fine, no problem. Then it is given that material supplied by D. Material supplied by D. Now you cut also this line. Correct? After this entry, next entry will be material supplied by D 92. So on the debit side of joint venture, we are going to write here to D. And in the column of D, we are going to write by joint venture 92,000. It is correct. Then finally, and you please cut this line. This line is not there in the question. In case if it is written, you simply cut it out. Correct? You cut it out because we have already written 4,17,500 here. So we need not require to write it again. After this, it is given value of material. You will write in the note that no entry for loss of, no entry for loss of stock. Why? Because it is a short co-ventureship and it will come to end immediately once the task will be over. Then we are going to receive the contract price. Entry will be joint bank account debit, shares account debit to joint venture account. So on the credit side of joint venture account, I will write by joint bank. Correct? The consideration we have received in cash, and we are going to write by shares, 5 lakh rupees. Now in the joint bank account, I am going to write here to joint venture, and in the shares account, we are going to write on the debit side to joint venture 5 lakh rupees. Now these 5 lakh worth of shares have been taken over by D. So I will write here towards the credit side by D, and there is a loss of 30,000. So on the debit side of D, I will write 2 shares. On the debit side of D, I will write here 2 shares, which I have written here, 2 shares. And this loss of 30,000 will also be debited to joint venture. On the debit side of joint venture, we have written here 2 shares, 30,000 rupees. Is it clear to you? After this particular point, what else is given? We are given that R took over the balance of the stock. Now balance of the stock, 35,000 worth of stock was taken over at 27,500. So you are going to write here by R account debit to joint venture 27,500. At what value we are taking over, that is important. So on the credit side of joint venture, I will write by R, and on the debit side of R, I am going to write here to joint venture. Now we are going to close this account. The total will be 14,29,500. And then whatever loss will be there, you will divide it in the ratio of 3:2. And then you are going to write the amount of share of loss in the respective account of the co-venturer. Then finally you will make the final payment, correct? And these final payment ultimately will be credited to what we call your joint bank account. Final payments. So this is how you are going to do this particular question. Is it clear to you or not? So main point was with respect to supplier. You should be in a position to do even this question. Question number 6. In this question, pant, suit, tie undertake to erect a 5-storied mansion for a national housing trust. And the contract price was agreed at 50 lakh to be paid at 45 lakh in cash and balance by way of shares of the company. They agree to share the results of the venture equally. So this time they are going to share equally. A joint bank account was opened where they contributed 6 lakh, 7 lakh, 50, 4 lakh respectively. So you can easily do this particular entry, no problem. Your first entry you need not require to pass, just for your, when you will attempt this question through this entry, it will be easier for you. 2 pant, 2 suit and 2 tie. So they have contributed 6 lakhs. They have contributed 7 lakh 50 and they have contributed 4 lakh. This is the entry which you are going to pass, correct? Total will be equal to 11 plus this 17 lakh 50,000. Joint bank account debit to all these things. Then it is given pant arranges preparation of the building plan, etc. and pays 64,000 as architect fee. That means 64,000 worth of architect fee paid by pant. So your entry will be joint venture account debit to pant account, because pant is arranging the building plan and for that he is paying architect fee of 64,000. You are going to write 64,000. Suit brings in, similarly suit also brings in other implements and concrete mixture valued at 1,60,000. So for the joint venture he is bringing some concrete mixture 1,60,000. And tie brings in motor lorry worth rupees 1,50,000. Also tie is spending something 1,50,000. So on the debit side of the joint venture, you will write 2P, 2S and T, and on the credit side of respective co-venture, you are going to post these items. Then it is given that they paid out of joint bank account. You simply add all these expenses. All these expenses have been paid out of joint bank account. So 2453,600 plus 1464,400 and plus 1,60,000. So total is equal to 40,78,000. So your entry will be, third entry will be joint venture account debit to joint bank account for the expenses 40,78,000. 48,70,000. On completion of the contract, the moment you realize that contract has been completed, the moment you realize, correct? So you will have to pass the entry first of all for receiving the contract price. You are receiving the contract price this time out of 50 lakh, 45 lakhs in cash. Joint bank account debit. Shares account debit to joint bank. So on the credit side of joint venture account, you will write by joint bank by shares 50 lakh, 50 lakh. Then it is given that Pant took over the shares at a valuation of 4,60,000. So Pant is taking over. So you will write entry Pant account debit. He is taking over the shares at 4,60,000. Loss will be debited to joint venture 40,000 and to shares account. 5 lakh worth of shares have been taken over by P. After this, it is also given that concrete mixture is sold for 1 lakh and plant and other implements are sold for scrap as 20,000. So this time remaining material have been sold out. So your entry will be Your entry will be joint bank account debit. That is 1 lakh worth of you sold concrete mixture for 1 lakh and implements for 20,000. So total amount 1,20,000. Correct? And then you are going to write here to joint venture 1,20,000. This is the entry you are going to pass. And then it is given that TIE takes back the motor lorry at 80,000. So motor lorry has been taken over by TIE. So you will write the entry TIE account debit to joint venture account 80,000, 80,000, and then you prepare the ledger account on the basis of this. Is it clear to you or not? I hope we are beginning now with question number 14. Correct? This was the question which we were about to do in the last session, but session was wrapped up and I had at the time told you that we would be doing this particular question in the upcoming one. So now we are going to do this particular question. This is similar to the question actually which we did earlier. Now before we move over to this particular question, let me explain the theme of this particular question first, then you will be able to understand it in a better manner. So in this question we will see, just allow me to create a bit of space for me. In this question, there is a company by the name of Samsung India Limited. By the name of Samsung India Limited. And we will see that this particular company is interested in issuing 1 lakh shares to the public. 1 lakh shares of ₹10 each to the public. That means this particular entity is interested in raising 10 lakh worth of share capital. The question which we did earlier under joint banking method, over there also I had talked about this particular point, that often when entities actually issue share to the public, they are not very sure that whether all the share would be subscribed or not. So in order to play safe, generally such entities enter into a contract with the underwriters. In this case, there are two co-venturers by the name of Mona and Tony, and they are working as a sort of underwriters. That means they undertake the guarantee to get the shares subscribed on behalf of the entities. So they are working as a sort of underwriters. Underwriters, correct? So Samsung India Limited entered into a contract with Mona and Tony Limited, and Mona and Tony Limited undertook the guarantee to get their shares subscribed. And for their services, as we saw even in the earlier question, these underwriters will receive some consideration. In this case, Samsung India Limited will give them consideration for their services 5,000 shares of ₹10 each. So if all the 1 lakh share will be subscribed, then Mona and Tony will receive 5,000 shares. Now the next question is, we have to see out of 1 lakh shares, how many shares have been subscribed and how many shares haven't been subscribed. We will see later on when we will go through the question. It is stated in the question that there is short subscription. There is short subscription to the extent of 5,000. That means applications fell short by 5,000. That means out of 1 lakh, 95,000 shares have been subscribed. But 5,000 shares haven't been subscribed. Now, if underwriters have undertaken the guarantee to get the share fully subscribed, indirectly it means underwriter will have to purchase the shares which haven't been subscribed. So in this case, these 5,000 shares will have to be subscribed by Mona and Tony Limited. Correct? So these 5,000 shares will have to be now subscribed by Mona and Tony Limited. We will see in this particular question later on that these 5,000 shares, of course, of ₹10 each, will have to be purchased by Mona and Tony Limited. But in this question, Tony has paid for these 5,000 shares. Correct? Tony has paid for these 5,000 shares. Now, because out of 1 lakh, 95,000 shares have already been subscribed by public, and 5,000 shares which were not subscribed by the public now have been taken over by us. So that means total 1 lakh shares have been subscribed. So we shall now receive actually 5,000 shares as our consideration. So total number of shares. So total number of shares. Total number of shares with Mona and Tony, 5,000 shares which they subscribed and 5,000 which they are going to receive as consideration. So total number of share with Mona and Tona now is equal to 10,000 share. Now these 10,000 share question states have been sold at the rate of 50. And question further says that these 10,000 shares have been sold, but Mona received proceeds for 4,000 shares. That means 4,000 into 15, 60,000 worth of sale proceeds have been received by Mona, and Tony has received the balance. That means 6,000 into 15. That is 90,000 worth of sale proceeds must be received by Tony Limited. Tony. So this is the question. Now I will go through this question. You will be able to understand it now very quickly. Mona and Tony agree to underwrite the subscription at par 1 lakh shares of rupees 10 each in Samsung India Limited and to pay for all expenses up to allotment. So indirectly they have undertaken the guarantee to get 1 lakh shares subscribed on behalf of Samsung India Limited. The consideration in return for guarantee is 5,000 other share which I just told you. Correct? So their consideration will be 5,000 shares. Now further it is given that they are going to share profits in the ratio of 3:1. Further question states that Mona provided the funds to meet the following expenses. If I will add all these expenses, it will be equal to 4850, registration fee, advertising 2850, 2,300. So total of these expenses is equal to 10,000 and these expenses have been borne by Mona. So that means in this particular case, Mona has incurred expenses to the extent of 10,000. Correct? And further, Tony has made payments for rent and solicitor's charges that is equal to 8,000. So total expenses of Tony is equal to 8,000. Now it is given that applications fell short by 5,000 share, which I told you earlier. So short subscription is 5,000. That means 95,000 shares have been subscribed by the public. Tony took over on joint account and paid for the same in full. I told you these 5,000 shares will have to be purchased by the co-venturer now, but Tony decided to pay for these shares. Correct? The guarantee having been fulfilled, the Samsung India Limited handed over to Mona Limited 5,000 share. As I told you, we have already purchased 5,000 share and now Samsung India Limited will hand over 5,000 shares to us. So total number of shares with us will be equal to 10,000. They sold all the shares at rupees 15 per share. So all the shares have been sold at the rate of 15. The proceeds were shared by Mona Limited for 4,000 shares and Tony for the balance. As I told you, proceeds have been received by Mona for 4,000 shares and Tony for 6,000 shares. So this is the question. Similar sort of question which we did under joint banking method, if you remember. Correct? Let us say books of Mona. These are the books of Mona. So Mona will prepare a joint venture account. And besides that, Mona will also prepare Tony account. Co-venturer Tony account. Now, in order to begin the question, first of all, I will have to see how much expenses have been incurred by Mona. Because we are doing the accounting in the books of Mona, obviously the Mona is going to pass entry joint venture account debit to cash account. Expenses 10,000. Correct? Then Tony has incurred expenses, so Mona will write entry joint venture account debit to Tony account. Now Tony has spent rupees 8,000 on rent and solicitor fee, and besides Tony has also paid for short subscription. There was short subscription of 5,000 shares, and these 5,000 shares have been taken up, but Tony made the payment. So, total payment made by Tony is equal to 58. 8,000 expenses, 50,000 for short subscription. Is it clear to you? We have written here Tony, so in the books of Tony, in the account of Tony, I am going to write by joint venture. That is equal to 58,000. Now, all we have to do is to see that how many shares we have and for what amount we have disposed them of. As we have seen, actually, we disposed them off at the rate of 15, but sale proceeds of 4,000 shares has been received by Mona. So Mona will write entry cash account debit to joint venture account. 4,000 shares at the rate of 50. 60,000 rupees will be received by Mona. And then I will write here Tony, because Tony has received sale proceeds of 6,000 shares, 90,000. So here I have written by T. On the debit side of Tony, I am going to write joint venture, sale proceeds, 90,000. Now all I have to do is just to tally this account. 1,50,000 minus 68,000 will give us 82,000. Now this profit will be transferred to Mona, but in her own books she cannot write her name. So she will write for her share of profit and loss account, and for Tony, T. And profit sharing ratio is 3:1 as we saw earlier. So let's see how much it is. 80,000 divided by 4 is equal to 20,500. Is share of profit of Tony, and 61,500 is share of profit of Mona. Now here again I have written by T, so I will cross it to the Tony's account by joint venture, 20,500. Now I will tally Tony's account. So whatever balancing figure I will get, it will be presumed that Tony will pay us this much of amount finally, 11,500. This is the balancing figure. I have already solved this question. You can see here, correct? So this is the share of profit, 20,500 and 61,500, and finally we are going to receive 11,500. So this is your second method, when record is maintained by each party, but they maintain full-fledged record. Now next we come over to memorandum joint venture account. Memorandum joint venture account is also known as when each party records his transactions only. What does it mean? In this case, let us say there are two parties, A and B. Correct? A and B. A in its own books will prepare joint venture with B account. Joint venture with B account. Joint venture with B account. Correct? A will prepare an account, joint venture with B account. And in this account, A will record only his transaction. That means transactions of A only will be recorded in this account. He will not record the transaction incurred by B. Likewise, B will prepare joint venture with A account. Joint venture with A account. And in this account, he will record only his own transaction. That means neither of the party will record the transaction of the other party. So that is the difference between the second method and the third method. Now in order to know the profit, they will prepare a common account known as memorandum joint venture account. And how this account is prepared? Objective of preparing this account is to know the result, that is profit or loss. Correct? But how this account is prepared, that is the theme of this particular question, this particular topic. Let us see. In order to understand it, let us pick up a question. Okay, let me first start with a strong question. 15. In this question, it is given that A and B decided to enter into joint venture for sale of electronic motors. So in this case, at least you have noted that there are two parties. One is A and another one is B. Correct? It is stated in the question further that A purchased 200 electric motors. So as far as Mr. A is concerned, he has purchased 200 electronic motors and he has purchased those motors at the rate of 1750. Correct? Further, it is given and dispatched 150 motors to B. It is given that out of 200 motors, he has dispatched 150 electronic motors to B. We are not going to pass for dispatchment any entry. We are not going to pass any entry for dispatching the goods. Important point is that out of 200, 150 electronic motors we have sent, that means A is left up with 50 electronic motors now. Further, it is given that when he dispatched the goods, Mr. A incurred 10,000 on freight and insurance. So on freight and insurance, Mr. A incurred 10,000 rupees. It is also given in the question. Now it is given 10 electronic motors were damaged in the transit. As I told you, when we dispatch the goods, 10 electronic motors damaged. I have already told you under joint venture, we never do any accounting for damaged goods. So no entry will be made for this particular part, electronic motor damaged, correct? On 1/2/2000, 5,000 was received by A from the insurer. Insurers means insurance company. So A might have taken an insurance policy. So he got rupees 5,000 as claim against these damaged machines. So Mr. A also received insurance claim of rupees 5,000. We will pass entry for this, but we will not pass any entry for damaged goods. Further, it is given that A sold 50 electronic motors at 2250 each. So as far as sales of A is concerned, because he was left with 50 electronic motors, correct? He sold them at the rate of 2250 each. It is given in the question. Further, it is given now that on 25/5/2019, B took delivery of the electronic motors and incurred the following expenses. So B incurred expenses to the extent of clearing charges, repairs and go down rent, and total expenses is equal to 10,700. So now coming over to Mr. B, as far as B is concerned, he has incurred expenses of rupees 10,700. Correct? So rough notes we are also preparing side by side. Further, it is given he sold the electric motors below. So he has done the sales as follows. As far as Mr. B is concerned, as far as sales of Mr. B is concerned, it is given that he sold 10 damaged motors. 10 damaged motors were sold at the rate of 1,700 each. So even damaged motors were sold. If damaged motors have been sold, that means we are going to receive something. We are going to take that into account. Similarly, 40 motors he sold at the rate of 2,000. 40 into 2,000. That will be equal to 80,000. Correct? And then 20 motors at the rate of 3,150. 20 into 3,150. 20 into 3,150 will be equal to 20 into 3,150, 63,000. And then he sold 80 motors at the rate of 2,500 each. So 80 into 2,500, that will be equal to how much? That is 80 into 2,500, 2 lakhs. So if I am going to add, I will get the total sales made by B. So that is 2 lakh plus 63,000 plus 80,000 plus 17,000. So total sales is equal to 3,60,000. Is it clear to you? Total sales of B. Further, it is given, it is agreed that they are entitled to commission at the rate of 10% on respective sales. Both these co-venturers are entitled to 10% commission. So as far as commission of B is concerned, it will be equal to 3,60,000 because total sales of B is this. into 10%, 36,000. And total sales, as far as sales of A is concerned, 50 motors he sold at the rate of 2250. That is 1,12,500. And sales commission on it will be 5%. So 5% of this will be equal to 5625. This will be the commission of A. Correct? Further, it is given that they are going to share profits and losses in the ratio of 2:1. This is profit sharing ratio. And now it is given that B remits to A the balance of money due on 5th of April 2020. And we are asked to prepare joint venture with B account in A and memorandum joint venture account. So this question we have to solve now. In order to solve it, this question, first of all, I will write books of A. Books of A. In the books of A, as I told you, I am going to prepare joint venture with B account. Joint venture with B account. Number one. Besides that, now in the books of B, we are going to prepare joint venture with A account. Joint venture with A account. Joint venture with A account. Correct? Once we have prepared both these accounts, then we are going to prepare a common account that is known as memorandum joint venture account. Memorandum joint venture account. Then we are going to prepare this account. And in order to prepare this account, okay, let's have a look whether we haven't left anything to chance. So, A purchased 200 motors, dispatched 150 motors, paid 10,000 as freight and insurance. 10 motors damaged, 5,000 was received by A. Then on 15/3/2020, A sold 50 electronic motors at the rate of 2250. One more information is given. Mr. A received 1,50,000 from B. It is also given that Mr. A has received 1,50,000 from Mr. B. A has received 1,50,000 from Mr. B. B took delivery of their electronic motors and incurred 10,700 as expense, and then his sales were as follows, and commission and profit sharing ratio. So everything is now taken care of. Now we can start solving the question. See here. First of all, I will take into account the transactions of A. Correct? As far as transaction of A is concerned, the first transaction is that he has purchased some goods. So joint venture with B account, debit, to cash account he is going to write, or to bank account, whatever you may like to write, purchases. As far as purchases are concerned, 200 into 1750. 200 motors he has purchased, 200 into 1750. That is equal to 3,50,000. Only A will record this transaction, 3,50,000, correct? Further, he has incurred some expenses. You must have noticed here. on freight and insurance, correct? That is equal to 10,000. Then what he did, he sent 150 motors to B, correct? And what B did, B has, it is given in the question, incurred expense of 10,700. So first of all, I am going to write in the books of B to cash expenses. Expenses of B, we totaled them up 10,700. Then B made the sales, and total sales of B is equal to 3,60,000. So I will write here by cash sales 3,60,000. So this transaction is also over. Besides, it is given in the question that both the co-venturers were entitled, even A has also incurred some sales. We haven't taken that into account yet. Sales of A is equal to by cash sales 50 motors at the rate of 2250. That is equal to 1,12,500. Besides, it is also given that A has received from insurance company 5,000 rupees by cash. Insurance company 5,000 rupees. So all the transactions of A, purchases over, insurance claim, sales over. Now transactions of B, as far as is concerned, sales is over, expenses is over. Now both these co-venturers are entitled to commission. So A will also receive some commission. So when A will receive some commission, joint venture with B account debit to commission account. And we computed the commission of A 5% of 1,12,500, 5,625. Joint venture with A account debit to commission account. B will also receive some commission, and commission of B was 36,000. Both the co-venturer will record only their transactions. Now last transaction is that it is given in the question that A has received 1,50,000 from B. Because A is receiving something by cash, it is a sort of advance from B. That is equal to 1,50,000. If A has received from B, that means B must have sent to A. So here he will write to cash 1,50,000. So now all the transactions which have been incurred by the respective parties have been incorporated. Once you have incorporated the transaction, now you have to prepare memorandum joint venture account. It is known as memorandum joint venture account. Why in accounts and when we use the word memorandum? When we deviates from normal accounting policy. We will see that this time when I am going to prepare the joint venture account, I am not going to prepare it as per the rules which so far we were following in preparing the joint venture. Because now we will deviate from those rules. That is why we are going to use the word memorandum. Memorandum in accounts is used when we deviate from the normal practice. Is it clear? Now see, in order to prepare the memorandum joint venture account, what you are going to do, you are going to write here all the transactions incurred by A and all the transactions incurred by B. Correct? Which are appearing on their debit side. Similarly, on the credit side, all the transaction incurred by A and all the transaction incurred by B will be incorporated. That's all. For example, on the debit side of A, you have written purchases and expenses and commission. So you will write here A, purchases, expenses commission of A. 3,50,000 purchases. You can see debit item is appearing towards the debit side. So we are not following proper accounting rules. That is why we will use the word memorandum. Expenses 10,000. Similarly, commission 5,625. So all the transaction of A towards the debit side I have put here on the debit side of memorandum account. Now on the credit side we have written by cash sales. So I will write here sales 1,12,500. And then I am going to write by insurance company we have received some insurance claim 5,000. Correct? And here we have written cash. It is very important. You are going to write all the items of debit side which are appearing in these two sets of account towards the debit side of memorandum joint venture. Similarly, all items which are appearing on the credit side will have to be put on the credit side of the memorandum joint venture. But you will have to be cautious with respect to one item. When a transaction appears in both the sets, for example, when A received cash from B, this transaction is appearing here also, and this transaction is appearing here also. So that is why such transaction, because it is contradicting, correct? So this transaction will not appear in the memorandum joint venture account. And that is the reason I haven't written here by cash. Is it clear? Now similarly, we will pull out all the transaction of B. As far as B is concerned, his expenses are 10,700. His commission is equal to 36,000. And we are not going to write cash because this cash also appears in the books of A also. Now cash sales. Sales of B is equal to 3,60,000. So this is how you are going to prepare the memorandum joint venture account. Is it clear to you or not? Once you have incorporated all the items of debit and credit which are appearing in the books of both the parties, correct? Now you are in a position to find out the profit. Suppose if I am going to find out the profit in this particular case, 1,12,500 plus 5,000 plus 3,60,000 minus 3,63,50 and 10 minus 5,625 minus 10,700 minus 36,000, and that is equal to, let me see whether I have written all the items or not. Let me also check here. In the books of A, we have prepared in the books of A, joint venture with B account 3,50,000, we have written 10,000 we have written, and commission is 10% or 5%. Oh, commission is 10%. It seems I have computed lesser commission. This is the fault by me. Actually, commission is 10%. So 10% commission will be 11,250. Commission of A, we have wrongly computed at the rate of 5%. Actually, it is 10%. 11,250. Anyway, point is that we need to understand everything. 11,250. So my profit will be equal to 59,550. 59,550. This profit will be transferred to respective partner in the ratio of 2:1. Divided by 3, that is 19,850. Multiply it with 2, that is equal to 39,700. Correct? So not a very tough task. Now share of A will be written. Don't write towards the credit side. It is very important to understand. Profit 39,700. And share of B will be written over here. Profit 19,850. 19,850. Now we will tally this account, and now by tallying this account I will come to know how much amount I have to receive from B or how much amount I have to actually pay to B. But this time debit side is bigger, so I will receive from B. 3,50,000 plus 10,000 plus 11,250 plus 39,700 minus 1,12,500 minus 5,000 minus 1,50,000. So 1,43,450. 1,43,450 I am going to receive. Similarly, I will tally this account, and here also I must get the same figure. 1,43,450. Is it clear to you or not? 3,60,000 minus this, minus this, minus 150, minus 19,850. So 1,43,450. This is your memorandum joint venture account. I hope you got a fair bit of idea now. And this was the strongest question. So now we move over to here in the solution. Okay, fine. Now we move over to the next question. C and Sand entered into a joint venture to purchase and sell New Year gifts. New Year gifts, correct? They agree to share the results equally. On 5th of November 2023, C purchased goods worth rupees 1 lakh and spent 6,000 in sending the goods to Sand. So this time, C is incurring what we call some expenses. So in the books of C, we are going to write joint venture with Sand account. Because this transaction has been incurred by C and he has purchased some goods and spent 6,000. So on the debit side of joint venture with Sand account, I will write to cash or bank, purchases 1 lakh, expenses 8,000, correct? Then it is also given that he also paid 2,000 for insurance. That is why I have written expenses 8,000. That is 6,000 plus 2,000. 6,000 plus 2,000 expenses. Further, it is given now in the question that on the same date, C drew a bill of exchange upon Sand for rupees 1 lakh at 2 months. And he got the bill discounted at the rate of 18% per annum. Now, because bill has been drawn by C, so C will write the entry BR account debit to joint venture with Sand account. Or simply by Sand account you can write. So, and this entry will be with the amount of bill that is equal to 1 lakh. Is it clear to you? So as per this entry on the credit side of joint venture with Sand account, I am going to write by BR 1 lakh. Then I got this bill discounted. Cash account debit. I got it discounted. Discount account debit. What will be the amount of discount? 1 lakh is the amount of bill. 18% is the rate of discount. And we got the bill discounted 2 months before the maturity date, we shall presume, because bill is of 2 months. Correct? It is not given when we got discounted, but bill is of 2 months, so we presume that we have got the bill discounted 2 months prior to the maturity date. So 1 lakh into 18% into 2 divided by 12. So 3000 is the discount. So we will receive 97,000 and 2 BR. But this entry will not be posted anywhere because we are not preparing cash account. In the books of in the books of C, we are not preparing any cash account, discount account or BR. However, the discount will be written towards the debit side, joint venture with SAND account to discount account. That is 3000. So that is why this discount will appear over here. Discount charges. Is it clear to you or not? Clear? Now question says that SAND spent 3000 on cartage, 5000 as rent and 5000 on advertisement. 3 plus 5, 8, 8 plus 5, 13,000. Now we come over to the books of SAND. Now SAND will prepare joint venture with C account. Is it clear to you? Joint venture with C account. Because these expenses have been incurred by what we call SAND. So SAND will write to bank. There are no purchases of SAND, but SAND has incurred expenses of 13,000. So I will write 13,000. And before that, you must also understand. When you drew a bill corresponding to this entry, SAND will write in the books of SAND will write joint venture with C account to bills payable account, because he will sign the bill and pay back and then return the bill to you. Correct? So you will receive the bill. It is bills receivable from your side, but it is bills payable from my side. So 1 lakh. Because of this, in the books of SAND, in joint venture with C account, I am going to write 2 bills payable. I am going to write 2 bills payable. Two bills payable 1 lakh rupees. Is it clear to you or not? Now, corresponding to this, we are not going to pass any entry. Corresponding to this, we are not going to pass any entry. Is it clear to you or not? So corresponding to this, we are not going to pass any entry. You have to pay attention. And under this method, it is important to understand one important aspect. Under this particular method, we are not going to pass any entry like this one. Joint venture with C account debit to discount account. We are not going to pass this entry under this method. Is it clear to you? Because now we will presume that these expenses have been borne by C. So ultimately we will make him the final payment. It will get automatically adjusted. So we need not require to pass this particular entry. That is the point which you need to understand. Is it clear to you? So then it is given, he sold, he means SAND. He sold all the gifts for rupees 2 lakh. So in the books of SAND, I am going to write buy sale 2 lakh. After retaining gifts worth rupees 2,000 for personal use. It is a sort of drawings. So these drawings are made by SAND. So for sale, he is going to write 2 lakh, and the goods which he has taken for personal use will be written as drawings. So these are the transactions of what we call SAND, and these are the transaction of C. Now, once you have incorporated all the transactions, you are going to prepare the memorandum joint venture account. In the memorandum joint venture account, I have already told you whatever transactions which have been incurred by these respective parties, all these transactions will be collaborated. Debit side item will be put towards the debit side, credit side item will be put towards the credit side. But any such transaction which is appearing in both these sets of books will not appear in the memorandum joint venture. For example, in this case, this transaction, bills receivable which is appearing here and bills payable which is appearing here, they are crisscrossing each other. So this transaction will not appear in the memorandum joint venture. So you can see in the memorandum joint venture account, we have written all the transaction of the C, the purchases of C and expenses total 1,08,000, and then expenses incurred by Sand 13,000. Then discount charges 3,000. Is it clear to you? Which we have written under C. Discount charges 3,000. And then on the credit side, there is no transaction. On the credit side, in the books of Sand, there is no transaction. However, we have written here bills receivable, but it will not appear in the memorandum joint venture account. Correct? Similarly, buy, bank and drawing. Both these transactions will appear. Buy, sale, buy, drawing. After incorporating all the transaction, now I am going to compute the what we call profit or loss, which is 78, and they are going to share it equally 39,000. Then I am going to write in the books of C, profit and loss account, share of profit 39,000. And similarly in the books of Sand also I am going to write profit and loss account, share of profit 39,000. Then we will balance each other. Here it is appearing 50,000 and here also it will appear as 50,000. Is it clear to you? So not very tough nut to crack. You can easily manage such questions. Now we come over to 17. As far as 17 question is concerned, let's have a look over here first. In this case, it is given that A1 and A2 entered into joint venture. So, as far as parties are concerned, in this particular case, there are two parties. One is A1 and another one is A2. Correct? It is given that they have entered into a joint venture to buy and sell air conditioners. And they entered into this relationship on 1st of April 2019. On 1st April 2019, A1 sent a check of 5 lakh to A2. So the first transaction says that A1 has sent a check to A2 and amount is 5 lakhs. On 4th April, A2 purchased 400 air conditioner at a cost of 4,000 each. So A2 has purchased some air conditioner and he has purchased 400 air conditioner at the rate of 4,000 each. So that will be equal to 16 lakhs. 16 lakh worth of purchases made by A2. He sent the air conditioner. After purchasing, he sent the conditioner to A1, but no entry will be made for sending the goods. A1 collected them and paid freight 4,000 on 4th of April. Now A spent some expenses in the form of freight, that is 4,000 rupees. On 25th of May 2019, A1 settled the account with A2, actually make it A2, and sent him a check. Correct? And they shared profits and losses equally. Profit sharing ratio is 1:1. And now it is given that details of sales made by A1 is equal to as follows. So A has done the sales in this manner. He sold 40 air conditioner at the rate of 6,000 and discount on sale price is 20%. So how will you compute the amount of sale? First you multiplied 40 with 6,000. 40 into 6,000. That is equal to 2,40,000. And then you subtract 20% from 2,40,000. 20% will be equal to 48,000. So that means net sales is equal to 1,92,000 as far as sale of A is concerned. 40 into 6,000 less 20% of this amount. 40 into 6,000, 2,40,000. You compute 20% of 2,40,000, that is 48,000. Subtract 48 from 2,40,000, you will get 192. Then 200 into 5,600, that is equal to 11,20,000. In this case, no discount. And then 160 into 5,400. If I will multiply 160 with 5,400, it will be equal to 8,64,000. Then I will subtract 10%. That is 86,400. So selling price will be less 86,400. It will be equal to 7,77,600. So total sales, I will add all these items. That is equal to 20,89,000. So total sales of A1 is equal to 20,89,000. Very simple question. You can manage it by yourself, but still I will do it for you. Correct? I will do it for you. Don't worry about that. So first of all, I'm going to write books of A1. Books of A1. Obviously, in books of A1, we are going to prepare joint venture with B account. Joint venture with B account. Sorry, with A2 account. This time other co-venturer is A2. Sometimes these names are very confusing one. Then we are going to prepare in the books of A2 books of A2. As far as books of A2 is concerned, we are going to prepare joint venture with A1 account. A1 account. So once we have prepared all these accounts, then we will prepare the memorandum joint venture account. Correct? Memorandum joint venture account. Memorandum joint venture account. So let's have a look over the transactions of A1. First of all, it is given that A has sent a check to A2. When A will send the check to A2, he will write the entry A2 account debit to bank account. Here A2 means joint venture with A2. So in joint venture with A2, A is going to write to bank because he has sent the check. And check is of rupees 5 lakh. And this check will be received by A2. Correct? In the books of A2, towards the credit side of A1, I will write by bank. So you can see this is a intra-company transaction or intra-party transaction, and this transaction will not appear in the memorandum joint venture account. So this one is over. Now we are given that A2 has purchased 400 AC at the rate of 4,000. So in the books of A2, we are going to write here to bank purchases. So as far purchases are concerned, that is 400 AC at the rate of 4,000, if you want to show 16 lakhs. And then he has incurred any expenses. A2 hasn't incurred any expenses. Then we are given that these ACs were sent back to A1 and A1 is spent 4,000 in collecting the same. So in the books of A1, I am going to write here to bank expenses 4,000. Now, all these ACs are in the hands of A1 and A's dispose them off for 20,89,000. So in the books of A1, I will write here by bank sales. Total sales is equal to 20,89,000, which I just showed you. 20,89,000. Is it clear to you? So this information is over. information with respect to this is also over. Everything is over. Nothing else is given in this question. Now, as far as memorandum joint venture is concerned, transaction incurred by A, bank will not find place, but expenses will find place. To A1, expenses, 4,000. I will write 4,000, correct? Then we have got, in this case, A2. I will write here to A2, purchases. Purchases is equal to 16 lakh. Then on the credit side, we have written in the books of A1, by bank sales. So I will write here by bank, by A1, sales, 20 lakh 89,000. Now, as far as A2 is concerned, we have written here by bank, but it is an intercompany transaction. We are not going to write it. Then we are going to find out the profit. So let me check what is the amount of profit. So amount of profit is equal to 4,85,600. 4,85,600. How can it be 4,85,600? Let me check it up. The total of sales is not 20,89,000 because it is 600. So let me, 20,89,600 is the sale. Sale amount I have written 20,89,000. Actually, it is 20,89,600. 20,89,600. Let me check also. 20,89,600 minus 4,000 minus 16 lakh. You better note it down. 4,85,600. So this profit will be transferred in equal ratio divided by 2. A1, A2. 2,42,800. 2,42,800. Now in the books of A1, you will write here to joint venture, memorandum joint venture, profit 2,42,800 plus 4,000 plus 5 lakh minus 20,89,600. So ultimately this time A1 will pay to bank balancing figure 13,42,800. This is how we are going to prepare this particular account. Similarly, if you want to show A2, here you are going to write memorandum joint venture, profit. We computed amount of profit equal to 2,42,800. 2,42,800 plus 16 lakh minus 5 lakh. So we will receive the same amount by bank balancing figure, and it is 13,42,800. 13,42,800. Is it clear to you or not? Is it clear? Absolutely clear. So this is how you are going to do all the questions of the joint venture. Now there are some theoretical questions I have also given in your notes, and then some past examination question. All these questions we have already done. You can easily manage this question of your own, correct? All the questions have been given in a solved manner, correct? Easily you can maintain because we have already done all these questions, but just go through it for your practice sake, correct? So with that, we come to the end of this. So these 4 questions I have taken And then I have added a section MCQ. So you must do MCQ questions also. Answers which are given in bold, correct? Options which are given in bold are your answers, in fact. So all these things are given absolutely in a fully solved manner and in a comprehensive manner. I hope so that you would agree that we have covered this particular chapter. So in the next session, we shall meet you, and obviously we are going to meet you with something new. So till then, it's time to say goodbye, and next time when we'll meet with new chapter.